Hi, everyone, and welcome to The Hash, where we bring you the latest and greatest in crypto and culture. My name is Naomi Brockwell, and today on the show we have Genlser, Will Foxley, David Morris. Welcome to the show, everyone. And we're going to start off by talking about Gary Gensler. So, Securities and Exchange Commission Chair Gary Gensler said in an interview with the Washington Post a bunch of stuff that we're going to dig into. Let's go straight to a soundbite of him.
It's highly likely that they have on these platforms securities, investment contracts, or notes, or others that fit the definition of security. Those platforms should come in. They should figure out how to register, be in an investor protection remit. Now, not many have. And so I do really fear that we'll keep bringing these enforcement cases, but there's going to be a problem. There's going to be a problem on lending platforms or trading platforms. And frankly, when that happens, I think a lot of people are going to get hurt.
So Gary Gensler has said that there is going to be a problem on lending or trading platforms. A lot of people are going to get hurt. It just begs the question, who is getting hurt by 4% interest on lending programs? It's a real question, right? So, we can dig into some of the other things he said as well, but I'm going to throw this to the group to start off with. Will, what are your thoughts on Gensler's comments here?
Totally. So I have a few thoughts, and they're not as negative as you may think based on my previous comments. I appreciate that they're actually talking about this in public. I think that that's been a huge issue for the industry writ large, that there's been a desire for the SEC to interact and be communicative about their policies and the way that they view this new industry. So I think it's a positive step that we see him front and center, Washington Post, talking about this subject. I think that's huge for the industry. And to his point right there, and to your comment about 4% interest, I don't think 4% interest hurts anyone right now, but that's not what the SEC is looking at, just to play devil's advocate. They're worried about when the bottom falls out of the pail, so to speak, and we are entering a bear market and there's a financial crisis, and then everyone comes complaining to the SEC later and says, why didn't you protect me? Well, Gary Gensler also has to protect his own back here. So I think that's why he makes those comments. I don't necessarily agree with it. I think the nature of stablecoins and the nature of decentralized finance makes it almost impossible for these sort of catastrophic things to happen. But that doesn't seem to be the paradigm that Gary Gensler is walking through with this conversation so far. Nothing's in stone yet either, I think is important to note. This is just the beginning of those conversations, even though Coinbase did withdraw its lending application for the time being. Naomi, I'll throw it back to you though.
Yeah, there are a couple of counterfactuals I want to bring up. First of all, when Coinbase went to DC and met with every regulatory body they could, the only one that refused to meet with them was the SEC. So that's a big sign that the SEC is kind of all talk and isn't walking the walk. Gary Gensler loves to get out in front of media and say, talk to us, we're open, we want to have a discussion, get some clarity. And when it comes down to it, they've routinely provided no clarity in any of their rulings, and they actually refuse to engage with a lot of these platforms. Again, had for 3 years asked the SEC to give them guidance. How can we do this legally? And the SEC didn't give them any. So I just feel like that's kind of a point against Gary Gensler's rhetoric here. And the other thing I will bring up is actually a tweet from George Selgin. So he's a well-known monetary historian. He says, I would be happy to publicly debate Genlser or Gary Gordon, who's an economist, or anyone else who claims that history proves that private currencies aren't viable without heavy-handed regulation. If even then, heck, I'd happily debate several of them at once. And personally, I would love to see that debate because I think George Selgin is pretty awesome. This point is referring to comments that Gensler has made about how the history of private money is the history of this stuff not lasting long outside the purview of government, right? And Selgin has written many books about how this is just historically not the case. So for someone who keeps citing how he's taught a course on this at MIT, maybe he should go back to the schooling and learn about some of this stuff and why we don't need heavy-handed regulation, because Selgin could definitely school him in that. But I'll throw this to the group. David, what are your thoughts on all this?
Well, actually, I think I'll go for it. The thing that struck me most about the transcript of this interview was actually not anything that Gensler said. It was the way the interviewer set him up at the opening, where he started talking immediately about this was, we had a recent drop in the market, which crypto people know was not that big of a deal, really. But the interviewer says there was an 8% drop. Shouldn't we impose some regulation to stabilize the price of these assets, which just makes me jump out of my skin. There's already enough of a debate about whether we need to be protecting investors from risk, but as soon as somebody, and I'm sure Gensler kind of deflected it, and he didn't necessarily play into the question's implication, which good for him. But the idea that a regulator has some responsibility to regulate or control the prices of investable assets is dangerous stuff. And so that's important to the context. And, I think the thing that I would say about Gensler's sort of agenda here, what comes to my mind a lot is, what are the costs of fraud that have been ongoing in this space? And that's a little bit separate from the lending platforms and securitizations. But I think that is where my interest lies, is can the SEC help us stop frauds, which are diverting funds that could be going into building stuff? Jen, you had your hand up for a while, if we have time.
Yeah, I'll just quickly add this point, and then we can move on. To your point, Naomi, Gensler did point to the fact that he taught at MIT, and he said that he is a proponent for the technology. But then he said, I don't think that technologies long last outside of a social and public policy framework. And so I don't think that he is wrong, but I also don't think that we've seen innovation move as fast as we are now. And I'm hearing a lot of problems. Every time Gensler speaks, I hear a lot of problems and I don't hear any solutions. And coming back to that consumer protection narrative, I don't think that serving subpoenas at conferences and refusing to work with companies who are actively trying to get clarity on regulation is acting in the best interest for consumers. So I am waiting to see this framework that he's speaking of, and hopefully the SEC can come out soon with some kind of guidance and some framework. Those were his own words, and we can get some more clarity and move on.
Just to jump in very briefly, I don't know if it confirmed that the SEC serving somebody at that conference was actually real. I'm not positive about that. Somebody might know more than I do.
Yeah, Ryan Selkis has confirmed it, but I think externally outside of that, I'm not sure. But yeah, just to wrap up there, I will say that, Jen, to your point, talking about whether or not the SEC is focused on protection or not, if you look at the first company that the SEC ever went after, it was Satoshi Dice, at a time when there were all kinds of scams going on in the crypto space, and they targeted success rather than the scams. So it's very clear what the SEC is going after. They're going after success. It's not about protecting people for a lot of these platforms. So it's a sad side of affairs. But Jen, I'm going to throw it back to you for our next topic.
Well, speaking of solutions, Coinbase is said to be working on a pitch to regulators on how to oversee the crypto industry. So sources say that the company plans to roll out a plan in the coming days, so that is this week, and it intends to argue what should and should not be defined as a security. Very interesting, considering the last time we defined what should be or should not be a security was, I think, in the 1940s. But Will, I'm going to kick this down to you. Do you think that Coinbase has a chance here to pitch a solution to regulators?
The first thing that comes to mind is like 7-Eleven regulating how they cook their own hot dogs in-house instead of the FDA kind of making decisions on things like that. And I just don't love the image there. Maybe that's unfair, but I don't understand, or I don't really like the idea of, if you're going to have regulation in the first place, having people in the industry make their own rules. I think like that's why you have external third bodies if you are going to accept regulation as a thing. I'm not a huge proponent of regulation in the first place, but if you're going to accept it as a premise, as like a needed thing in an industry, then that's why you have a third party do it, just to be judicious about it. David, I want to get your take on this though.
Yeah, I'm a little bit more open-minded about this in principle, but the fact that it's Coinbase makes me a little bit less optimistic. I think that there really is a space for trying to redefine some of these regulatory regimes in deep ways. And I really would love to see more deep thinking being done about how that works by people who really know their stuff. And Coinbase knows the industry, and Coinbase obviously can afford to hire really sophisticated lawyers who could lay out some interesting arguments. And so in a perfect world, I would actually love to get that. But unfortunately, this being Coinbase, I am anticipating that this is going to be pretty self-serving in the way it lays these things out. We know that Coinbase did this thing called the Crypto Ratings Council a couple of years ago that was supposed to provide some analysis of whether particular crypto assets were securities. And I didn't look into it too deeply myself, but that was not received particularly well in my memory in terms of how, I guess, honest and not just self-serving it was. So I'm not against this in principle, but I'm not sure Coinbase is really going to be able to contribute much because of it's Coinbase.
Yeah, I'm going to cut Coinbase
Naomi,
a little
sorry.
bit more slack than thanks, David. I'm going to cut them a little bit more slack than you guys have. Although I definitely understand the two different directions that this could go to. Like when you have companies lobbying the government, they're usually lobbying out of self-interest. There's a lot of rent seeking. There's a lot of regulatory capture, and we need to be mindful of that. That being said, Coinbase has come up publicly against the SEC. They have done a lot of things to push back in favor of the industry. They fought the FBI on, revealing huge amounts of data on their users. So they have done a good job in looking out for their customers' best interests here. So until I actually see their proposal, I'm definitely not going to shoot it down, because when it comes down to it, I absolutely don't want regulators outside of the industry regulating this, because all they're thinking about is the risks, and they're ignoring all of the upside that people are getting from these platforms. They're just like, okay, I'm honed in on zero risk. How do we get to zero risk? That just doesn't happen. There are all kinds of trade-offs that happen in life. And so when you have people inside the industry, they actually understand, what kind of value is being provided to consumers, and they're careful not to curtail that. Whereas government regulators outside of the industry are usually just focused on, well, I don't care what we curtail as long as, we get some stringent rules in there. It's exactly what Lawsky said at the Bitcoin hearings for the bit license, when he, pulled the quote about, like, I don't care if 1,000 flowers die and are not allowed to bloom as long as we catch one bad guy. And that to me is the antithesis of, the spirit of humanity, right? We strive towards progress. We make mistakes along the way. We shouldn't be stopping people from making mistakes if it catches one bad guy. It's just a terrible way to run society. So I'm interested to see what Coinbase comes up with, and if they can help be a strong force for the crypto space at large, which is not outside of the realm of possibilities, right? Because Coinbase completely relies on crypto being a thing that's embraced by a lot of people. They want consumers to be happy. I mean, they're really relying on all of that. So sure, they could create some bad laws that necessitates a central entity like Coinbase to maybe be like a custody or something like that. We'll have to wait and see what the details are, but it's definitely not obvious that this is a net negative thing right from the outset. But Jen, I'll throw this back to you.
Yeah, I tend to agree with you, Naomi. I see this as a positive thing for the industry. At the end of the day, they're not making laws. They're suggesting what could happen. And so far, we've seen nothing happen. So I look forward to seeing what they come up with. And hopefully, if it can serve as a kickoff point for other very smart people in the industry to weigh in on, so that we can get some more clarity. But I think that we have to go to a break now, and Naomi's going to tell us what is coming up next.
We are going to the break. So after the break, we're going to be talking about Dapper Labs. Their giant valuation has ballooned. We'll give you that number in a moment. Stick with us.
Very
And welcome back to The Hash. So the team behind NBA Top Shot and the Flow blockchain has announced a new deal with Spain's La Liga, and also a new valuation of $7.6 billion after closing a $750 million funding round yesterday. So Dapper Labs, of course, is the team. Did I say that? Did I say that incorrectly?
You said 750.
Did I say just 250? Oh, yikes. Okay, we'll keep rolling here. Don't worry about that. So we got, I don't know how to pronounce this team actually, Coatu, oof, I was probably wrong, Andreessen Howard's, Google's GV, Version 1 Ventures, and others invested in this round. The round was first reported in April by The Information. Of course, this comes on the heels of yesterday, SoRare closing a even larger round of $680 million for another kind of NFT blockchain-based application for sports. Naomi, you love sports. Let's hear it. What do you think about this?
Well, these numbers are mind-boggling. $7.6 billion valuation. I mean, this is a space that, how many times have we called the death of this had on this show. I mean, we're
Like many
really
times.
eating our words in a major way right now, because these companies keep going from new height to new height. They're even, you have the heads of these places talking about how competitive industries, competitive companies are actually helpful to them. We've started to see differentiation in the market. It isn't just like we are an NFT platform. It's like, no, we are a sports NFT platform. We are a fantasy NFT platform. Like, we're really starting to get these niches as the market matures. I'm still waiting for Adam Levine's prediction to come true, where, I keep bringing it up, this great analogy that he brought up, where he's like, NFTs, they're kind of like a key that might unlock something, but all we figured out is how to paint the key, make it look pretty so far. But I'm definitely interested in that next level. Like, we're all in the world of collectibles right now. We've started to go into like the gaming world a little bit. I want us to see us go further down that track and actually see what these NFTs can do. What kind of ownership can they transfer to people? What type of things can they unlock on these platforms? That's really the essence of this programmable token or programmable money, or however you want to look at it. It's like programmability. And so I want to see what we do with that. But David, I'll throw to you.
I think that my main thought here is it's interesting to see Dapper go in a much more kind of commercial direction with this project. So it really marks a contrast with some other platforms that are doing NFTs that tend to have sort of more community orientation, or at least community participation. So you would look at like Solana in particular, but even like Cardano has a pretty good NFT community. Bitcoin, even through a company called Stacks, you can now do NFTs on Bitcoin that apparently are getting some traction. And these are all more grassroots, bottom up things. And the interesting thing is, if you compare the market caps of these public blockchains with NFTs, even though that 7.8 billion for Dapper sounds like a lot, it's nothing compared to, Solana is at 42 billion. These are all huge. And so I think one of the questions that you face with this deal is, this is basically a private blockchain, and it is based on these deals with big companies. And is that the model that's going to succeed? It's hard to say. It's a question, though. Jen, you want to pick it up?
Yeah, sure. So, every time I see a massive raise like this, I'm always curious about the strategy, right? And so now we've learned that Dapper is going the European route. They're going to bring video NFTs to soccer fans in Europe. And I wonder why they haven't been disrupted yet. There are so many NFT platforms out there. Why are we not getting video highlights from sports team on other platforms? And I wonder if that's coming. And so now we see, is it Sorare or Sorare?
I thought it was Sorare.
I just Sorare sounds
European,
so much
so
more
Sorare.
fancy. Sounds so European.
Yeah.
I know. People are probably going to come at me like, she doesn't even know what she's talking about. Anyways, so Sorare is now coming to North America, and it just feels like the market is ripe for disruption right now, and everyone is playing very nicely in their own corners. But I think we're going to see some strong competition. But Will, I'll pass it back to you.
Yeah, just to answer your general question, I think like my general thought is it has a lot to do with copyright law and where the demarcations are still trying to be figured out. Like, does this image of whoever it is, like the sports player, does it belong to the team? Does it belong to himself? Does it belong to the NFT company that has the rights to the team itself? So those questions are still being figured out. My general question is why so much capital is needed for these teams that are fundraising. So you're not only trying to get the largest funding round when you're a startup, you're trying to get the right amount of capital for your team to make the best decisions going forward. So like if you have these huge funding rounds, you're diluting your stake in the company as a founder by making these huge raises. I mean, maybe it's necessary to bootstrap these ecosystems that they really want because they want this to be like a social media landscape of sorts. So maybe you need all that capital to build out all the applications necessary for people to start interacting with NFTs in a more mainstream way. But on the other side, it almost seems like these valuations are too high for the amount of users they have. NBA Top Shot does have a lot of users, but Sorare only had about 600,000, which, I mean, that's maybe a lot for an NFT company, but like compare that to anything else. Like the DeFi landscape definitely has more players, and I can't really remember a DeFi company that raised $250 million or $650 million in a funding round recently. So that's my kind of concern, is coming from a startup perspective. Where are you putting this money, and do you expect it to get you through like the next few bull cycles, maybe? Is that, or the bear cycles? Is that what they're thinking? But I'll leave it there. That's my 2 cents.
Yeah.
Well, let's
it's worth
change
pointing
track
out too
here.
that these big rounds. Oh, sorry.
Sorry, go ahead, David.
I was just going to point out quickly
Final
that these
thought.
big rounds
David.
do also increase risk for the company in certain ways and can make it less stable, even financially sometimes. So that's another point to Will. Sorry,
yeah,
go for it.
No worries. I'm actually going to throw it back to you. Some interesting revelations, some leaked slides. Tell us what's going on there.
Yeah, this is why I'm not hosting this show, because I'm bad at this stuff. But this was a great scoop by our reporter Danny Nelson yesterday, who basically on the dark web somehow found some slides from Chainalysis describing their use of a not fake per se, but a compromised block explorer site to gather IP data from suspicious people that they're investigating. And there's a lot to talk about here in terms of, in my case, the difference between investigation and surveillance. I'm a little bit more positive about this than perhaps some of us might be. So I'm curious, actually, in particular, Naomi, what your thoughts are about this. We do have this big firm now that is engaged in some monitoring and watching for criminals on the blockchain, and the impacts could be complicated.
Yeah, I mean, for me, this article was chilling just how transparent all of our digital activity is. I mean, I spend most of my time delving into privacy and how many security holes we have in our everyday life when we're trying to have privacy in our digital world. It's such a difficult thing to achieve. And this article just, for me, highlighted that difficulty. So the fact that they set up this honeypot website where people are typing in an address, like we rarely type an address into a block explorer unless it's an address that we control, or it's an address that's, interesting and we're curious about it. But most of the time, we're checking whether funds have been received into our wallet, all of that. So the fact that you have this honeypot website collecting the IP addresses of those people, using that data to link it to the other data that they have so that they can figure out where people live, which wallets belong to them. I mean, it's quite pervasive, the amount of surveillance that is in the crypto space already. So, I mean, what was also interesting, they talked about this in the context of Monero, saying that 65% of Monero transactions they had, cases involving Monero, in this collaboration with Chainalysis, they were able to have pretty good leads that were usable to law enforcement. And this is Monero, where we talk about, they have privacy all through the stack. They're doing things to obfuscate IP. They're doing things that, help protect you in all kinds of ways, bulletproofs, ring signatures, all of that. And we're able to find pretty convincing leads, pretty helpful leads, I should say. So, I mean, what this comes down to for me is people need to understand privacy in the digital space. They need to understand what type of wallet they use is intrinsically linked to how much privacy you have. If you're using an SPV wallet, if you're using a wallet that is pinging some API and you're basically shouting to the network, hey, I want to look up these addresses, please tell me and refresh the balance in my wallet. All of that stuff undermines your privacy. And I mean, the best way to have full privacy, there are lots of different things. Like I know that Chris Pacier worked on the Neutrino wallet. Neutrino was a technology, I believe, that was developed by like Lightning Labs. I think maybe someone could correct me if I'm wrong, but it was this technology that basically it creates this filtering algorithm that means that you're not like broadcasting publicly the definitive addresses that you want. It basically it mixes it in with a bunch of other stuff, so it just makes your wallet more private. And I think people need to start to understand their wallets more, understand what privacy they actually have there. Maybe start looking at IP obfuscation if they actually want privacy. I mean, it doesn't matter whether you're doing bad things or good things. Like that's not the issue here. The issue here is, do you want to be part of dragnet capture of your financial data when you're an innocent person, or do you not? And if you don't, and you want to maintain some financial privacy and integrity in your life, then you maybe want to start learning about this stuff. But Will, I'll throw it to you for your thoughts.
I have nothing to hide. They can go through all my transactions. I'm not worried about.
So here's what I'll say to that. Snowden had a great response to that, where he was like, the fact that people say I have nothing to hide, it's kind of like saying I don't care about the people who maybe do need protection. Maybe they're journalists, maybe they're activists,
the criminals.
Oh, yeah, absolutely. Yeah, get out of here, Will. Get out of here.
My thoughts really quickly on this topic, though. Chainalysis and other blockchain explorers and blockchain companies like this that do these investigations, they're not putting themselves in favor with the rest of the cryptocurrency industry, which is only growing. People won't forget about this kind of stuff, especially like the more devious kind of things like this, where you're tracing people's IP connections and not giving a disclosure about that on the Explorer beforehand. And that's why there's this huge culture, especially within Bitcoin, that you run your own node, you run your own infrastructure, and you protect your own keys. You have a hardware wallet and you try to use Tor or something like that. I don't think that's very mainstream, but I think it's important to keep that culture going forward because there's incentives for people to be on the other side, tracking your transactions and keeping notes and tabs on what you're doing.
Yeah, that's such
Before
a great
we wrap,
point,
I want to make one really quick point, which is, I'm going to play slight devil's advocate, which is we need to keep in mind the distinction between surveillance and investigation here.
Right.
The specifics of this case are still not clear, but Chainalysis, to my understanding, as an institution, is mostly engaged in investigations which target, individual people who are already suspected of crimes through the police departments that work with them. So I do think it's important that we keep an open mind about investigations while we oppose surveillance. Those are different things.
Can I just add one thing to that, David? I think Will cited this stat yesterday. Chainalysis themselves has said that under 1% of crypto transactions are associated with crime. And so it's just curious that most of their business is going to investigating crime, and it's under 1% of transactions are associated with crime. What are they doing with the rest of their time?
So it's a good question. Good question. But on that note, we will leave you with that question for you to ponder and stick around, because later on this afternoon, we have All About Bitcoin at 3 p.m. We have First Mover at 9 a.m. tomorrow morning, and then Back With Us and The Hash at 12. Make sure that you join us for that. But go enjoy your day. Go protect your privacy. Do all the things that a good crypto person should do. And we'll see you tomorrow. Bye.
Hi, everybody.